All right, folks, we're going to get kicked off here, and I know that hopefully by now in the meeting you have met everybody on stage, but I'll give everybody just a quick chance to introduce themselves before we start with the questions. So, Shaun, I'll just start with you.
Yeah, no problem. So my name is Shaun Adkins. I'm Director of Procurement for Lakeside Book Company. Been in the industry now for about 20 years.
I'm Hunter Johnson. I'm the CEO of JPS Books and Logistics. We're celebrating our 45th anniversary this year. We do most of our work for K-12 publishers and corporate training departments. We're a third-generation family business based out of Dallas, Texas.
I'm Heinke. I'm with Billerud. Billerud are a Swedish forest products company. Notably, a couple of years ago, just acquired Verso, doing a big transition, paper to packaging in the UP in Michigan. I lead our sales team and based in Connecticut.
I'm Ashley Gordon from HP, where I'm the Publishing Market Development Manager, and I work with our PageWide and Indigo divisions to help them interact with the publishing community.
Awesome. Well, we try to get a good mix here. We've got Lakeside, who prints a couple books a year. Hunter, and you guys just changed your name to Books and Logistics, so it's even better here on the supply chain. And obviously we have paper and OEM. But let's start with the printers. So I know Matt referenced the COVID and how that really did change supply chain a lot. But Hunter, how has your business changed over the last 3 years with regards to supply chain, specifically for what you guys do?
Yeah, so 2020 was the year that it was. A really tough year for us. 2021 was a really good rebound year. I think the demand came back kind of late in the buying cycle. So it was more, I mentioned K-12 is a big part of our business. That's very seasonal. That demand really didn't come back till June of 2021. So that year was crazy. Last year, we were more proactive in terms of customer demand, but then the other parts of the supply chain were tough with paper and glue and everything else. This year, it seems to be the closest to normalcy that we've had here in a while, with paper availability getting better, knock on wood, and then customers being more proactive than they have in the past. That's been our experience.
Shaun, what about you guys with Lakeside?
Yeah, I think for us, we've seen the continuing consolidation of supply in the industry, which has affected, our ability to get supply. Yeah, I think one of the things we've figured out is that we're now really married to the suppliers that are left in the industry, and so with that, we have to weather the good and the bad with them, and so that's what we've really stayed focused on in the last few years.
Okay, so Inger, paper, has been the key driver in a lot of things over the last couple of years, and these guys just mentioned it too. So how did we get to where we are today with the paper market, and where is it going, you think, for the next 12 months or so?
It's a hell of a loaded question. So here's my ugly side. Don't look at this for too long because it can feel sad. But, and this is not to scale, and I'm not sharing it with anybody, but so like I mentioned, I have a background in paper, but now I'm on the board side, which in this context, I guess, makes me a cover girl. Right? Mom joke. Thank you. So what's going on in general, and this actually being paper and board gives you two different perspectives on this, right? Because one is going this way and the other one's going the other way, right? And what's happening is that as the demand declines gradually-ish most of the time, but supply comes down in big chunks, right? Because you're taking down machines. And as you start to take down machines, you start with your smaller machines, and then you start taking down larger and larger machines, and that actually makes those gaps. So where those lines, where the demand line is above the supply line, which is what happened in 21 and 20, that's where prices are on the move heavy, right? And the fewer suppliers you have, the more those prices are going to move. The more consolidated the supply base is, the more those prices are going to move. And the larger these shuts get, the more dramatic and prolonged these gaps are, the harder is the pressure on the paper pricing. Sorry, on the pricing, and the reverse is going on the packaging side of the grades. And this is increasing, right? But it increases also in steps, and so you get more prolonged depression on price and more prolonged inflation on price. So that's kind of what's going on in 2021. To add to this incredible pressure in one of these gaps, there were a number of the supply chain crisis affecting the imports, the shipping, the container prices, and storms, hacking. It was like a lot going on in 20 and 21, and also some real increase in demand in several pockets. So that goes on. Nobody can get anything. And then the minute that anything becomes available, everybody starts buying everything. It's like the herd effect, right? So it's like if there was 5% of room, everybody bought 105%. If there was 10%, everybody bought 110%. And all of a sudden, everything starts filling up, right? And it takes a long time to recover from that, right? Because it's a long supply chain. In January, we couldn't find a warehouse anywhere in this country to put any paper or board. It was incredible. And it takes an awfully long time to react. So if you think about this, the book inventory at the retail level, at the printer level, on the road, in the warehouses, right? The paper inventory at the printer, the paper inventory at the mills, in the warehouses, or even on the ships on the ocean, it takes an awful long time to recover. That's something that I call COVID whiplash, right? And it even goes back down to like machine producers, Valmet, Voith. People are ordering machines, and it takes even longer time to recover from that. So that's kind of what's gone on, that what I call the post-COVID whiplash, combined with this sort of longer-term impact of declining markets and supply.
Well, and you just kind of mentioned it there with machinery, and Ashley, I mean, you were there at last year's annual. We had publishers asking us to please add more capacity, right? And I think I was just, like I said, I was at Inkjet Summit last week. Everybody, it seems like folks are in the market for new machinery and want to add more capacity, but we all know that labor is one issue, but it's not like you guys have brand new presses sitting in a warehouse ready to just put into somebody's shop tomorrow. So what have kind of been the supply chain issues on the equipment side, and what does that whiplash look like if someone does want to add machinery?
Most of the supply chain issues in manufacturing on our side have been mitigated. Sorry. There we go. What you mean, like pointed to my mouth? Should have learned that yesterday. So the delivery of machines is getting back on track. What we found is that we used to operate in a very just-in-time, lean environment because our suppliers were very reliable. We had strong relationships with them, and so we could anticipate this is when it will. And you could schedule, each step in the process. Because of all of the myriad of things that you just mentioned, that kind of reliability isn't there anymore. So it's interesting, what we're doing at HP mirrors what publishers are doing to a large degree, in that relying more heavily on accurate forecasting, trying to get much better at forecasting and understanding where demand is coming from and ordering farther in advance, and having a balance between that just in time and what you have on hand. Things like ink were never a problem. There were some electrical components that were definitely difficult to get at the height, but the crisis feels over. But there is also a permanent change in how we manage inventory and build out relative to demand.
Okay. So Shaun and Hunter, have you guys added any equipment, looked at adding new equipment, and when you are making those decisions, what are some of the factors in play?
Yes, we had quite a bit of our print equipment come up for lease this past year. So We put in quite a bit of new equipment, six different new pieces of printing equipment, including an inkjet web just as recently as February. I think the focus for us was on how do we get more throughput with less people and less space. We still have over 3 years left on our lease, so we are very space constrained, and the labor side of the equation, as we've talked about, is tricky. So just trying to get more density, which really played into that web decision for us, just with the throughput and all that comes with that. That was kind of a scary decision. We'd always been cut sheet. We had never sourced rolls, and there's a paper side of the equation on that, but it's been awesome for us.
Yeah, and in our case, I mean, we've added some digital equipment really just to replace, end of life equipment that's out there. The big focus for us in terms of capitalization is really upgrading our large assets. So new PLCs, new drives, new controls, really getting them to a modernized equipment that folks today can work on and operate.
So with both of you having said that, so how much are you looking at availability of parts and maintenance and things of that nature with regards to supply chain in your decision making, with maybe who you use or how you plan, or any kind of predictive, I think somebody mentioned yesterday, predictive maintenance and those kinds of things?
Yeah, I mean, that's been the focus of why we're trying to modernize our equipment, is for those reasons. A lot of the drives and PLCs and things that we use in our large assets are just not available anymore. You're out buying on Amazon and things like that, trying to get it. So, the more we can modernize that equipment, the more availability we have in those parts as things come to downtime.
Yeah, for us, I don't know that we've done as much due diligence as perhaps we might have should have on the kind of parts availability side, but on the service side, that's something that we've really, leaned in hard on is making sure we have the right partners from a service standpoint. Kind of the sales pitch on equipment is great, but stuff breaks inevitably, and how are we going to get it serviced? So really leaning into that side of the equation, and then internally really kind of beefing up our practices around preventative maintenance and schedules by equipment, who the owner is, just getting really prescriptive on that.
Okay. So Inger, on the paper side, yesterday we talked a little bit about the, I don't know, favorite word or dirty word, however you want to put it, of standardization. From the paper side of things, though, do you think the paper companies are looking at standardization or decreasing the amount of stocks offered based on the most popular stuff to make sure that those are in stock for folks? And what should printers, I guess, be ready to tell publishers when it comes to choosing the papers that they're using?
I think there's really sort of two distinct type of paper makers and vendors, and they are large and cost-driven and more commodity, and then they are smaller, probably non-integrated and specialty. And so, I mean, large, cost-driven, financially sustainable is probably what you want for the most part. Some of the specialty companies are incredible and have done an incredible job on marketing and creating these specialties, marketing them to end users, publishers, or brands, or whatever. And I think that is a wonderful model. But that sort of premiumization has to be carried all the way through the supply chain. It has to have legs. But I think that in general, it's got to be cost driven. It's got to be low cost. It's got to be financially sustainable, and invariably financial sustainability leads to environmental sustainability as well. But the industry, I would say, is a very different one than it has been, than it was even just 10 years ago. If we look at the ownership of the American paper mills, a lot of venture capital, right? A lot of pressure on margin, as it's been very cyclical. It's very capital intensive. And I would say that through all of that scrutiny, in its ownership has become very disciplined. In terms of, just managing its supply chain and managing its production, and measuring profitability throughout the supply chain. And I think that, unfortunately, what that probably means is that, and a few people mentioned this in the room yesterday, is that even though we're going to head to one of these gaps coming up, or we're in it probably right now, where supply exceeds demand, we're not going to see prices fall as elastically as they have in the past because of the consolidation and because of the discipline that these producers have. I hope that answers the question.
Yeah, I think so. But along those lines, what are the effect of imports, and is there anything that folks should be looking at through that lens?
Yeah. Beware recycled content. I forgot to add that. Speaking of imports, beware recycled content. It can be extremely volatile. With China being the big, cog in the wheel. It's in or it's not. I think in general that, on the board side, certainly what we're seeing on the cover side, that America will has become a net importer, right? Because American mill assets are aging out quite a bit. So there's been a lot of closures on that side. I think that on the graphical paper side, the book paper side, I think that it will ease down this way. It will ease down this way. There will be enough supply, but there'll be a few years where it's a pinch, and I think that the imports will fill in those gaps for sure.
Okay. So Ashley, you've spent a lot of time with publishers recently. I know you've been to all the various book fairs and had some really good conversations there. So with all that's been said so far, how do you think the printers and suppliers should really be talking to the publishers about the various supply chain issues that we're running into and how better to work together?
So most recently, hosting 2 events for publishers and printers together in Europe that included both North American and European publishers and printers from all over the globe, and attending the London Book Fair, where sustainability was everywhere. It was everything. Every single panel led with sustainability. So what publishers are looking at right now is a lot of irony in that they are quite consumed with sustainability, recognizing that paper is the largest single carbon footprint component of the entire printing and publishing process. And yet, because of their overreaction to the supply chain crisis, where they printed more than they needed, but they didn't know how much they needed, they're now pulping like crazy. And so pulping is, again, one of the biggest sins of the carbon footprint problem. So whereas they are trying desperately on one side to figure this out and how to use paper more sustainably, they are currently just sending more carbon into the air every day. So a lot of the questions for them around paper, and they're quite focused on paper. Every time I host an event, they say, please get paper people in the room. Please, we want to hear from mills. Which is something that's quite new for them. Most production managers had never had a conversation with a paper mill. But what they're trying to understand is similar questions to ours, like where is the paper coming from? What was the price going to be? Am I going to be able to get the paper that I want? How can I substitute? How can I partner better with my printer and understand what my printer has so that I can use what's available rather than constantly dictating? And they also were really interested in alternative paper sources, pulp sources, recyclable paper, although some niche publishers are really obsessed with it. Most of them recognize its volatility. So they're looking at, can we make paper out of hemp? Can we make paper out of sugar beet? Can we make paper out of bamboo? And what are the attributes of those papers? How likely are they? And can we get hold of them? And how expensive would they be? So publishers are thinking about paper a lot and asking a lot of questions. So I think it's a real opportunity for both mills and print partners to interact more with their publisher customers, giving them the knowledge that they're seeking. They don't even necessarily know the questions to ask. So I think it's an opportunity for book printers and papers to work together to kind of get ahead of those questions. And certainly whatever happens in Europe on a sustainability side kind of flows downhill. They're ahead of us on those questions, but they're coming. So I think if we get ready for those questions and be able to give them the answers, we can kind of drive the conversation and the drive it in a direction that we want it to be, that's really viable and sustainable financially, not just economically.
Yeah, and just so you all know, I guess I didn't mention this as part of my update because that was unscripted. And Brian, where's Brian? Oh, there he is. BMI will be joining the Green Book Alliance as an organization. Brian with BISG and BIC and BookNet Canada have really been driving a lot of the sustainability efforts in North America, because as Ashley mentioned, they're heavily focused on it in Europe. But we'll be joining that cause, and we've been giving some feedback from a printer perspective with regards to those sustainability guidelines. We'll continue to work with them on that, because it is something that's, as Ashley said, it's rolling downhill from Europe to us. But I guess, and you mentioned something that, for those of you who are in Chicago for Book Manufacturing Mastered, we think we had a lady from the American Psychological Association, the big printer of journals and things of that nature. But I remember her big takeaway from that meeting in Chicago was she didn't even know she could talk to the paper mills. It was like, wow, I'm allowed to do that. And it was like, yeah, if you work with the right printers. So I guess, and this is for Shaun and Hunter, but when it comes to sustainability in paper, do you feel like the publishers know what questions to ask? Are they asking those questions? Are they concerned right now about those things? Because I know during COVID, the folks who wanted at least 50% recycled paper in all of their books and it wasn't available were like, okay, can I get 30%? Well, no, 20%, 10. I just need the book. I don't care. Right. So has that gone away? Are they back to wanting 50% recycled paper, or have you seen those demands from the publishers?
Yeah, I don't know if I can speak specifically to, the demand that they're asking, but, we get those questions a lot. I think the difficult piece for us is kind of figuring out, how do we respond, right? Like, I think in the previous BMI meeting that I was at, we had discussed, maybe there needs to be a collective response, right? Or a group assigned to determining what that collective response is. Because, I think each of us individually are trying to navigate that ourselves and really, quite frankly, struggling, right? And I think we're all trying to do the best we can, but don't really have the answers.
Yeah, I think for us, it's still kind of early in the paper availability rebound, where in the recent years we're lower on Maslow's hierarchy of needs in terms of just customers being in survival mode. Oh, you have paper? Okay, you'll get my book order. So I think we're just too early to in the cycle to be at a place where customers are kind of revisiting those conversations.
Inger, have you seen any changes in behaviors in terms of ordering from the sustainability side of things?
Yes, but I'm going to be rude and comment on the packaging side of the business.
We'll allow it.
Thank you. So I think that the brands that are packaging have really come around in a big way to focusing on carbon footprint and not on recycled content, because they finally recognize that there's a few things that are driving that. Like they finally recognize, A, recycled is more expensive. B, pricing is volatile. C, it takes away from the strength and beauty of your package. D, people are getting onto this science-based targets, right? So big brands, Kraft Heinz, Estee Lauder, you name it, they're signing up for these science-based targets, and so they really truly are looking at their carbon footprint. So it's resonating, and it doesn't cost them money, right? From a paper perspective, So and it doesn't take away from the quality of their package. You mentioned hemp. That's got to stop. That's just ridiculous. Like the carbon. I mean, imagine how many acres of hemp you need to get the same amount of fiber that you would out of a tree. I mean, it's nonsense. It's got a high carbon footprint. It's got to stop. What's also got to stop is trucking garbage from the cities, where it would otherwise go into, Bill is laughing at me, stop laughing at me, where it would otherwise go into, crappy grades like corrugated or tissue or newsprint, and you're trucking it up to a mill that was built where the water is and where the trees are. So you're trucking garbage from cities to the forests. It's got a high carbon footprint. It doesn't make people recycle more. It's got to stop. I think it would be a wonderful idea if we banded together as an industry and started talking about carbon footprint and started talking about things like the carbon sink of forestry, right? So when trees are growing, they absorb more carbon. When they mature, they absorb less, and eventually they sequester it. So cutting down trees, industrial forestry done right, is extremely good for the environment. Please print this email, and I think we should get together as an industry, seriously, and because because it counts, right? Like recycling, of course, is important. We're going to recycle. It's going to happen. It's money, right? It drives its own. It's a business, right? But carbon footprint is really very important, and we can have an impact on it. And that's how I think we should be talking to publishers.
Yeah, all right.
You can.
Well, Dora, I'll bring the mic. I'll bring the mic around in a minute. No, that's okay. I have to do my obligatory. We are a trade association, and in no way do we discuss pricing or collaboration on pricing or anything else like that. There, I did my. For any corporate attorneys in the room, I did my disclosure statement. But pricing right now is the topic du jour because of inflation and, as Matt mentioned earlier, the oncoming recession and where does that go? And so, without being specific, because we're not allowed to be specific, but how are you guys, anybody on the panel really, adjusting for inflation, and how are your customers, whether that's the publishers or printers or anybody, finding the discussion of pricing and how things are changing? Because I know in talking to publishers, because I've spoken at various events with publishers as well, and they're all scared to death of raising the price of a book because they think people will stop buying it, but everybody's raising prices to the publishers. So how does the outlook kind of look in terms of, let's just say, this year, with inflation being where it is and a perhaps pending recession? Any thoughts on that? I'll let anybody who wants to jump on that first take a stab.
I'll jump in on that. I think as a book printer, kind of the perverted place that we're in right now is, we're rooting for, or at least I'm rooting for paper prices to come down, but I've built up so much inventory that I don't necessarily want, those assets on my balance sheet to be depreciating assets. So I think that's kind of one part of it. I think the other part of it is, while the rate of inflation increases has slowed, prices are still continuing to increase. So I think there's like a weird dynamic out there where you're not hearing about inflation as much as you were 6 months ago, 12 months ago, because the rate of increases are lower, but there are still increases. So I think that's the other thing we're trying to navigate is, we were kind of slow to pass along those increases. We've done more now, and I think we're going to continue to do that through this year. But I think the hard part of that is just smaller increases in terms of costs are still increases, and trying to navigate that side of it.
Shaun, okay.
Yeah, I mean, I think for us, and I can't speak as well to the way that we raise prices in terms of books to publishers, but as I see it from a supply chain perspective, we're probably in the best demand supply curve that we've been in the last 18 months, but we're really not seeing price of goods or services declining in the same manner that we are availability. So
I think prices will definitely ease. I mean, there's some fundamentals like the container rates, ocean container rates have come down. I know a lot of our input costs were very inflationary. The last 2 years have also eased. Starch, stuff like that. I think that they will ease. Interestingly, I bought a New York Times on Saturday, and it cost $4. But it cost $4 10 years ago. And I feel like we in the print business we're a little embarrassed to raise our prices to consumers, along with the inflation. And what the New York Times, my God, how much it's like 1/3 of what it was. I mean, it's a huge newspaper on a Saturday, but go ahead, put another $1 on it. That's my opinion anyway.
From a publisher perspective, it's very much segment driven. So children's publishers, for the most part, don't have a lot of price elasticity, particularly when you find books that are sold in a grocery store or a Walmart or a Target. They really can't move those prices up significantly, even though from a children's production standpoint, they have some of the most expensive product to produce. And so as a result, in terms of supply chain, they're having a really tough time coming out of China. They want to come out of China, but they're having difficulty finding alternatives, both that can produce the product that they need and particularly at a price point that will allow them any kind of margin at all. So they are struggling the most in the current climate. Trade publishers are in a slightly different position. They've got this sort of hybrid world going on from both production and from a sales standpoint. So you've got hardcover trade that is recovering. It plummeted during the pandemic when nobody could go into a bookstore and authors couldn't tour, and a lot of pub dates got missed because the publishers couldn't get their books in time. So during the pandemic, we had that bizarre flip of 70% of sales being backlist as opposed to frontlist. Normally it's 70-30 frontlist backlist, and during the pandemic, it was the reverse. It was backlist frontlist. So what's happening now is that there's a certain amount of normalization, and the books that are selling in hardback are the books that the publishers are pushing. So they're getting a little bit more control over the relationship between sales and marketing efforts and what actually moves. And for the most part, they feel like that trade is less susceptible to inflationary pressures. The people who read. So they may be able to go up a buck or two. The Prince Harry Spare, for heaven's sakes, was what, $36.95? I mean, it was incredibly expensive and sold like crazy. So some of it is matching price to the perceived demand. On the backlist side, that's still growing very strong, mostly because of book talk and social media campaigns that publishers can't predict. They don't know where these are going to pop up. If you look at the top 10 list, there are 3 or 4 books on there that are more than 4 years old of the last week. And that's just crazy. And it happens because of book talk and social media. So for those, changing the price of a backlist book, there's a lot that goes into all of that metadata, and the prices are printed on the book. And so it really puts them in a corner in being able to change prices on the backlist books that are selling well. So the one area that's got this in hand would be scientific, technical, medical, some academic. They already have very expensive books. They have an identified customer base that's small and they can get to them, and people want those books and they will pay for those books. So they're already doing a whole lot of digital short run, and they can absorb higher costs and their customers will pay it. So it really just depends on which segment of publishing that you're talking about. So you're also seeing layoffs, you're seeing offices close. They're finding other ways to cut costs rather than raise prices.
I think it was interesting. We had one publisher at Book Manufacturing Master who talked about they stopped printing prices on the covers.
Yeah, be careful because Brian O'Leary will go completely into apoplexy.
Yeah. But he said the reason was they were able to be more flexible, right? Because things change. Don't do that. Sorry, Brian. Okay. Brian says don't do that, but there's no publishers in the room, so that's okay. All right. Well, I'll walk the mic down. Yep, George is first up.
I think it seems to me you have the type of job where you're always getting paged, or if not, getting bored. Bad joke. But anyway, it seems to me not so long ago, we were talking about a shortage of truck drivers. It was 40,000, 60,000. Is that still an issue today? Or have the 85,000 IRS agents we hired got their CDL licenses?
Oh, it's gotten a lot better. It's gotten a lot better. We're not finding truck drivers on a daily basis. Toronto was fun. If there's anybody in the room from Toronto, shout out Toronto. That was fun during COVID, where the cost of a truck from Philadelphia to Toronto went from probably about $1,200 a truck to $12,000. and still hasn't quite recovered. So there's patches of weirdness. And I think, and especially crossing over the borders, can be strange at times. But for the most part, vehicles, drivers, the prices are still a little high. We just got hit with another fuel surcharge this morning, but it's not a problem anymore.
But I have a feeling, I'll talk to my friends at the ATA, but I have a feeling that number hasn't changed, to be honest. I mean, you're still at 3.5% unemployment. And as we talked about yesterday, there's just no people, period. So whether they're going into trucking or not, but I know that everybody's really hoping that those self-driving trucks start to work the right ways, right?
Matt, can I add one?
Yeah, go ahead.
From a publisher perspective,
yeah.
being aware of the shortage of truck drivers and also sustainability issues and how trucks are far more impactful in a carbon footprint than rail, publishers are looking at redirecting routes and having supply in different places, different distribution centers, so that they can take advantage of rail instead of truck. So that's a really new thing. And like when HarperCollins did it in the UK, and it made a headline like, oh my God, they moved them by train. So it's something that they never really considered. And again, it's what happened in the supply chain crisis. And now as we slowly come out of it, it's causing publishers to change their behaviors permanently.
And so, Hunter, you guys just changed your name to add the Plus Logistics. So what does that look like for you guys, and what impact has that had on your business? What are you focused on there?
Yeah, so we were JPS Graphics before, just in February, rebranded to JPS Books Plus Logistics. I think part of it was when we were graphics, there was a lot of questions on, do you guys do graphic design? Like, absolutely not. Just trying to better articulate what exactly we do. That the logistics for us is pick, pack, ship, fulfillment. About half of our facility is warehousing space, and we've talked about customers getting better at forecasting and things like that. I think they've been more, in our experience at least, been more proactive, but I don't know that they're necessarily better at predicting, because if I just look in the last probably 10 months, our skid storage has over doubled. So they're beefing up finished product that we're storing on their behalf, which is financially good for us until we need more warehousing space, which is tough to come by right now. But so it's not, sometimes when we add logistics to the name, they think that we're getting into the transportation side. We're still, partnering with UPS and FedEx and things like that, but it's more on the warehousing and fulfillment side.
Okay. Other questions? So, and Ashley, maybe you may know about that. Sorry, Joe. I read something about Amazon Europe now requiring all of the books that they sell to be printed in Europe as kind of a distributed print, being kind of the same thing closer. Have you heard, anybody on the panel heard more about the decisions of that nature?
It's definitely about driving more content inside the Amazon ecosystem. It's billed as a sustainability measure, having everything be done in market and local. Amazon wants to be deeper into the publisher's pocket and get in there earlier and earlier in the process. So it's disturbing from a publisher point of view, because just like the marbles in China, you don't want all your marbles in an Amazon basket. And if they're 60% of your sales, the last thing that you want is for them to also have control of your files and your production. So I would say, we could get on some soapboxes. I completely agree. We need to get out in front of that whole beetroot story. And because the publishers are floundering, they really need to know from our industry what will work. And they will listen if we offer them, meaningful advice. Publishers desperately want someone other than Amazon to print their books. So I think that's a real challenge to us as an industry, to step up and give them the opportunity, give them the services they need, so that they can with confidence push back on Amazon and say, you don't need to do that. And if that means finding a print partner in EMEA and you share the publisher's work. That's what a lot of publishers are looking for, a distributed network so that they can have both centralized production, but it's supported by distributed production in multiple markets. If everything goes to Amazon, we're all in a world of hurt. So I would really have that in your mind. If it ever comes up, whatever you hear about it, catalog that and look for opportunities for us to push back, because the publishers will want you to.
So kind of combining the whiplash effect that Inger talked about, and then the change in consumer demand for balance between front list and back list that Ashley talked about. So publishers have built up inventory. We talked about that. So what are they doing to try to work through their inventories besides pulping? What's their emphasis now? Are they pushing front list? Are they pushing back list? Just what's happening at the publisher level?
Is that me?
Probably you, Ashley.
Okay. Yeah, they're doing a lot of pulping. Unfortunately, that really is what's happening, because they're desperately trying to get down those inventories because they don't have a place to put the new books. They're looking for alternative warehousing solutions. So print service providers that also provide warehousing and logistics, particularly for mid-sized publishers, is something that's really attractive. They're looking at trying to move some of those responsibilities. They're really working on how to understand what is the right amount of inventory to hold. And part of that challenge is understanding risk mitigation. So how do you make sure you have the books in the right place? I think this is sort of an answer to your question, but one of the things that's really different right now is as I said, that sales are being driven by social marketing campaigns as opposed to publishers' campaigns. And there's also a real-time effect that's quite new for publishers. If you go to Amazon and you want a book that you just heard about on Book Talk and it's not available, it's some 10-year-old backlist and you can't get it, and it's telling you 2 weeks. Well, as a reader, your next step is to go to the brand. And in this case, the brand would be not the publisher, but the author. The author is the brand. So the author, by virtue of being published, has a Twitter account and an Instagram account. And you can reach that author instantly to say, I wanted your book and I can't find it. So then the author goes to the agent or the editor to say, why isn't my book available? So publishers are struggling with this pressure to meet demand that happens in real time, and it puts their own authors at risk, their IP at risk. So part of what they're doing is trying to create what is both a just-in-time inventory and always have inventory on hand. They're really struggling with what that balance is, that hybrid. You got to have digital available for almost every title, but you're also doing large offset runs that go into a centralized facility. So what some of them are saying is that they're getting partners from around the world, and if the partner cannot do both offset and digital, they don't even work with them anymore. They're severing relationships because they need to have that hybrid solution where I know you're going to do 30,000 of this for me, but I need 500 and I need it tomorrow. So they're looking for partners who can do both of those things, so that when they hopefully get through the pulping, I had been told that they would be mostly done with the pulping by, say, fall of this year. I understand Kevin Spall from Scholastic at BISG on Friday, what was he saying, 16 months maybe to get through? So he was a little more, less optimistic than what I had been hearing. So somewhere between the next 6 and 12 months, they'll have gone through it. And now what we need to make sure that they don't do is ever do that again,
Yeah. Marie, did you have something?
Ashley, you spoke about Europe being ahead of us in terms of sustainability. When we think about sustainability here, and I sell paper for Lindenmeyer, we talk about the sustainability of our supply chain, specifically the paper mills, right? Mm-hmm. Are they healthy? Are they here long term? Do they want to be in book publishing, right? So you talked about Book Talk. The difficult part of, a paper mill is it's either hot, we need it tomorrow and we need a lot, or we really don't need any. And so it's very difficult to ride the highs and lows, for a big paper machine. So when we talk to our customers, we're looking at who are you doing business with today? Which of those mills have already announced, reductions for 2024 and 2025? How are you going to make a change or a switch to somebody who is more sustainable, right? Going to be in this market long term. And should this market continue to be soft, if they make changes sooner, what are the contingency plans? So I think the definition of sustainability is a little bit different depending on where you are, in the segment. You definitely have environmental sustainability and economic sustainability hand in hand. And the crisis in the supply chain helped publishers to recognize that if it doesn't really matter if it's environmentally sustainable, if it's economically unsustainable, it goes out of business. So their newfound interest in partnering, and like Matt said, the young woman who said, I'm allowed to talk to my mill, the fact that they're figuring that out is because they recognize, and frankly, BMI and BISG and others have been really beating this drum. Bill Rojak, and the stat that you gave at Context, what are we at? We've lost 75% of our paper capacity since 2010. Am I getting that right? Everybody in the room, their eyes went boing. They're learning something about their industry that they never paid attention to before. And so that environmental sustainability can't happen without economic sustainability. And we need to keep pounding that.
I want to add a little bit to that. It's dawning on me here that one of the things that we need, and I would love it if we take this slide down, but one of the things that we need, thank you, as an industry is to open up that dialogue all the way through. The more, and it's happening, like you said, like we've got book readers reaching out to authors, right? So that's the very beginning of it, right? And then take it all the way back through the supply chain. And the more lucid conversations that we can have, the better we can plan and maneuver around that ugly curve, right? The better we can forecast. The more transparent the forecast, the more sharing of analysis of consumption and et cetera, sharing, predictions on market forecasts and everything, the better we'll get. More lucid conversations on supply chain, forecasts, and sustainability.
All right. Well, I think that's a perfect note to end on. So thank you very much, panelists. Well done. Thank you.